I appreciate the crowd this morning. I understand that many of you were at the ACG last night, and I was also reminded by Mathew Hanson that the TMA was having a meeting this morning. So there'll always be competition, and we do our best. A couple of things. We started, the Center for Free Enterprise started in 2015. David Brown and I started it, and it was sort of an idea was to bring people, ideas, and capital together and help to reinvigorate the regional economy. And we've been primarily here, although we have ventured out into the west side once, but we found that the same people were going, and so we've been here ever since. And David Brown worked with me for several years on this, and we've had at least 5 programs a year for 7 years. And then Eric Schwartz briefly partnered with me when David retired to Arizona. Eric Schwartz worked with me during a Zoom period when we were all on Zoom. And then Eric moved off to Texas, finding this to be somewhat of a moribund economy with a dearth of opportunities and wealth. And some of us who are still here making our way could disagree with that observation, but Eric moved away. And then we decided to be back at it live and in person. So this is our 3rd program since then. And we do have some sponsors. We have Wyndham Ragsford is a sponsor, and he does our videos, which will be available on our website. And we have Litkowski and Company is a sponsor. David Litkowski and Dale Litkowski. I read this week, I was disappointed to read this week in a Litkowski newsletter that Dale Litkowski, age 80, I believe, had passed away recently. So that's unfortunate. We welcome additional sponsors. We also welcome programmatic ideas. Oh, and the Calkins Law Firm, that's my law firm, is also a sponsor. In March, we're going to compete with St. Patrick's Day. And so how about that? And we're going to be on March 17th, we'll be here, and I'm putting together a program on SBA, because I have 3 acquisitions that I've been handling right about now that are all SBA financed. So it seems the SBA is a thing. But plus they did the PPP loans and the disaster loans, and there's been a lot of money pumped into the economy through the SBA. So we can look forward to that in March. Now today we have a great program. I think it'll be a very exciting and encouraging program. And let me briefly introduce our presenters, and then I'm going to start passing the microphone around. To my right is Mathew Hanson, who's with Emprise Partners. And then to his right is Rudy Sangari from Pars Capital, that you might remember Rudy, who stepped in for me last program, which was 2 months ago. And then Nathan Nicoll is there on the right, and he's with Intralinks. And then Matt Figas is to his right, and Matt Figas is with Melcap Partners. Now let me start by passing the microphone to Mathew, and I would ask him to give us a brief rundown on his career path. How did he get from there, graduating high school is #1 in his class, to here? Okay, Mathew, there you go. Just briefly, and explain what you do now.
Thank you, Ben. Wow, that's going to be hard to overcome. So I'm Cleveland native, Case grad with an accounting degree. Worked at Price Waterhouse, Prescott Ball & Turbin, which is a regional investment banking firm, now part of Wells Fargo. And I was just really blessed to work at Prescott Ball & Turbin in the go-go days of the 80s. So Mike Milken, high yield finance, capital raising, because that had not been done for a fairly long period of time. And I went out on my own in 1989, really to focus in the lower middle market space, with the thought that I could bring my capabilities as an accountant and an investment banker to the lower middle market and work with owners, many of which wanted to grow through acquisition. And so I have, over the years, done both sell-side and buy-side representation. I've completed over 50 deals representing buyers of companies. And several of my clients have made millions of dollars in the process. So it's been a really good run.
There you go. Okay.
Thank you, Mathew. Rudy Sangari, Pars Capital Partners. I think my career, I'm going to shorten it a little bit. Started at Siemens, looking for target technology to acquire before it really comes to the street. Moved on to Morgan Stanley for a few years, banking. From Morgan, went to a smaller bank in Minnesota called Broker Bank. And we did a number of different things. We did a lot of startup technology and North American shale oil. On the road, about $500 million in shale exploration, and had a client that had acquired some wells in PA, and she happened to be in a certain type of an industry. Asked me to look into it and get her ready for an exit. Liked her industry, which is contract research organizations and contract development manufacturing organizations, and kind of carved a little niche out of that transaction, and I've been at it since 2017. And we deal with a very small group globally, very niche, and it deals in clinical trials. So anything that touches a clinical trial, as far as manufacturing a biologic or drug, we look at it. Thank you.
Thanks, everyone. Great to see you all here. My name's Nicoll. I'm with Intralinks, as Ben mentioned. Cleveland native, graduated from John Carroll, so right down the road, coming down, brought up some memories. Again, I cover kind of the Midwest area for Intralinks, and I cover both some investment advisors as well as working directly with corporates as they're going through the M&A process, bondholder reporting, debt restructuring, all that good stuff. So looking forward to meeting many of you today.
Morning, everyone. Matt Figas, Melcat Partners. We are a boutique investment bank in Medina, Ohio, largely representing entrepreneurs and families in the sale of their businesses. I grew up in Newbury, Ohio, which is where Ben lives today. And went to school in Southern Ohio, Miami University. Had a cup of coffee at Deloitte right after college. And after that cup of coffee, got into investment banking pretty quickly. First working for Lead Park Advisors, which is another boutique in Cleveland. Was there for a couple of years, spent 2 years in the industry actually helping my family to manage their business. We sold that business 2 years after I started. I was 29 years old, was not in a position where I could retire. And so I went back into M&A, again at Lead Park, and then transitioned to Melcap a couple of years ago, where I've been ever since. And great to be here, great to meet you all.
Okay, great. Let's, we had a planning call for our program, and we talked about all the things that we read about and that we hear about on whatever, Bloomberg, or we read in the Wall Street Journal, about the increasing interest rates, about the problems with inflation, about the lack of IPOs, and et cetera, et cetera, et cetera. And then we all thought about our own experiences more or less in the middle market, lower middle market in Northeast Ohio, and how things are here. And I know that I have multiple transactions closing, a small law firm. I have multiple transactions closing every month, last month, this month, next month, probably the next month. So I wouldn't say that I've seen it too much busier, and the deals are getting done. And our crowd here, and I'm going to invite all of you to interrupt early and often, our crowd is going to comment about what they see in the market, what is happening, is it slowing, is it accelerating, and maybe what are the factors that are contributing to what's happening. And let's start with Mathew and his unique perspective into the markets, and then we'll pass the microphone around, and hopefully by then all of you will be, you will all be motivated to interrupt. Okay, Mathew.
So my posture today is that we should stop reading the newspaper and listening to Bloomberg and CNBC, because of the reality, or my reality, is there is a vibrancy in the marketplace, and the business owners are reacting to the challenges that they are facing. So if I look back in 2022, and price increases were going through the process. The good companies, the good management teams were ahead of the curve or with the curve and raised prices as they were coming through on their supply chain. And now if we look at the end of the year, while there was a softening in the fourth quarter, they are clearly profitable and within a reasonable margin of their overall budget expectations for 2022. Those who drag their feet on the price increases have seen the opposite side of that equation. As we start into 23, we have vibrancy. I think 3 different sell-side situations within the last month, buy-side opportunities that we're pursuing, and so I expect 23 to be a very good year. Again, other than the weather forecast of we're in a recession, we're going to die, type of a thing, I think that this is going to be a reasonable to good year.
Matthew, I'm going to back you up on that because when you hear the news, it feels like we've gone through a wormhole and there's another universe. I don't really have any bad news to report here, at least from my perspective in the sector that we're looking at. We've got really good tailwinds that have helped us. Mathew and I were talking, COVID has helped us in our industry. Again, we touch everything that a drug maker goes through during the FDA process. And that's got 2 components to it, drug and biologics. And that's got 2 components to it. But right now, less than 50% of that service of going through taking a molecule through a clinical trial is outsourced. So Pfizer, and the rest of them go through the process internally, but they also outsource. So that brought us to a halt when the COVID hit, because all the clinical trials came to a stop, and we all started working on the problem. So that created a backlog for us. Now that backlog, we still haven't gotten through it. So our drivers are very strong in one side of the business, on the actually manufacturing the biologics. We're looking at about a 12% CAGR through 2026, and we have a capacity issue. So the startups that are standing up manufacturing capacity, the multiples on picking them up are still very, very healthy. But from the global perspective, we keep track of that, and actually what we've seen that 2021 was a very good year, but 2022 wasn't as soft as we think, as compared to historical M&A. They're right in line. So if we compare it to 2021, yes, we're much softer, but compared to the rest of the years, they're not. And one other thing, we're seeing more of a mid-market movement in 2023 versus the large caps. We don't think large cap is going to be, doing many transactions.
Yeah, that's actually a really good segue into what my perspective is on this. We actually just recently came out with a deal flow predictor for what we think 2023 is going to look like. So obviously, we're looking at things broader than just Northeast Ohio, just, the lower middle market. But it's interesting because our findings are that probably on the large cap and some of these mega deals, you're going to see a significant slowdown on those. That you're not going to see quite as many of those, $40 billion deals for Twitter, things like that. But what we are expecting is a significant increase in the lower and middle markets. So I think probably, it's a little bit of what everyone's saying here, in that the news is bad, but for, probably most people in this room, and Intralinks included, the outlook is good, and growth is expected within kind of the sectors that we're talking about specifically today.
Well, I'm now not in a position to offer up anything original because my colleagues covered this so well. I guess I'll make 2 quick statements. It's unfair to compare the M&A market in 2022 and where we're at today in early 2023 to 2021. 2021 was a historic year, a year unlike any other year we've probably seen in M&A history. 2022, while volume softened in the latter portion of the year, the reality is That year was in line with your pre-COVID years, 15, 16, 17, 18, 19. 20 was an anomaly. If it wasn't in line, it was maybe up. And it's just not a fair comparison to make to 2021. If you weren't doing well in 2021 in the M&A business, in the deal business, you probably have to take a look in the mirror. In terms of what Mathew said about where people get their news on the M&A market, a lot of people read the Wall Street Journal, Barron's, Financial Times. All of those outlets, they're reporting on big deals typically. $500 million deals, $1 billion deals, $5 billion deals, $40 billion deals, bulge bracket deals. That's not where most of the folks in this room play. Melcap Partners, us specifically, we cater to the lower end of the middle market, call it deals that are going to trade $100 million and down. And I think, well, first off, that's where most companies in the United States are going to trade. Most companies are not bulge bracket type companies. But I think the reality is, and actually let me say, I see a bunch of my lender colleagues out there, so I might put my foot in my mouth here. But I think the reality is in the lower middle market, where the tendency is to equitize more when you do transactions, when you have a tighter credit market that typically impacts your bigger deals more, you're going to be a little bit better insulated in the lower end of the middle market because buyers are typically including more equity in the deal structure rather than debt. And so for us, I look at Melcap specifically. Our deal volume is just as high now as it was a year ago, just as high as it was 2, 3, 4 years ago. And I think to Nate's point, the lower middle market is going to be pretty well insulated from some of the tougher parts we're seeing in the broader economy and in the debt capital markets.
Matt, keep the microphone for a minute. Tell us a little about Melcap Partners. How many people? What do you do? Are you mostly on the sell side, mostly on the buy side? How does it come to you? Does it come to you through lawyers, through venture capitalists, through accountants, et cetera? Give us a sense of that.
Yeah, so Melcap Partners presently, we're 13 professionals, which we've grown a lot over the last couple of years. If we were to take a snapshot a few years ago, we were probably 8 or 9. With respect to our services, they're all tied to M&A. We're mostly sell-side focused. I'd say 90% plus of our mandates take a sell-side orientation, largely helping entrepreneurs and families in the sale of their businesses. And that last 10%, we do some buy-side advisory work for smaller corporates, larger privately held businesses, occasionally for private equity groups trying to execute on an M&A-oriented growth strategy for one of their portfolio companies. And I'd say we do 1 to 2 debt advisory or financing type engagements a year, which is how we've gotten to know some of the lenders in the crowd so well over the years. We are a generalist bank, so I'd say there are significantly more industries that we've worked in than ones we haven't. Is there anything I'm missing here, Ben?
I think that's pretty good. Yeah, and I will note that Al Melchior was going to be on our panel. And this panel, by the way, was going to happen last year on Zoom. And Eric was traveling to Texas that day, and we couldn't get the link. We couldn't figure it out. So we punted, and we've rescheduled. And it's wonderful that Matt Figas, who grew up with my kids in Newberry, was willing to fill in. Let me... Nate, why don't you tell us exactly what your company does primarily? It's with the data rooms and how all of that, fits into the equation.
Yeah, absolutely. So I'm sure probably a lot of you have worked with Intralinks in the past. So we're a virtual data room provider. And really people have used this traditionally in strictly the M&A sense, right? So doing the due diligence on the buy side, the sell side as you're going through a transaction. We've definitely branched out over the last few years and focusing a little bit more on some alternative use cases. So when we're talking, like I mentioned earlier, debt restructuring, reporting on private bonds, things like that. Essentially any instance where you need to communicate sensitive data securely to third party is a potential use case for Intralinks. And then actually coming off of 2021, what we heard from a lot of our clients were, hey, we've been so buried in work and we're pushing our people to the limit. Is there anything you can do that will help us to streamline some of these deals? And then coming into last year and moving forward, it's the same thing, right? Well, we have issues with staffing, things like that, so we need some additional support. So we've started to branch out and do additional things like outsourcing redaction for as a service for some of these deals as you're going through a transaction translation. So in the case of some of these foreign deals, working on translating those documents from the native language to English and vice versa is necessary. And then taking on some of the NDA support for the transaction, so going through the distribution, collection, negotiation, and kind of filing all that work. So branching out more than just the technology we started with.
Who usually brings you in, would you say? Was it usually the investment banker?
So I have a little bit of an interesting role that I work with corporates and investment bankers. So I would say a lot of what I do specifically comes directly from the corporates or from the companies reaching out, especially if they're doing a divestiture. And then a fair amount, maybe call it like 40% comes from the advisors that I work with.
Okay.
Yeah.
Okay, Rudy, can you share with us some of the types of projects that you work on? Specifically, are you working for the buyer? Are you working for the seller? Are you? And I know a lot about Rudy's practice, but I want Rudy to share a story of the type of ventures that he gets involved with.
Yeah. We're probably 50-50, Ben. So we're in a very fragmented market, in my little niche. Globally, we're about 35 to 4,500 companies total that do this, and they're all over. One of the unique things about drug development, if you want to market it outside of US, let's say, in this case, you have to do the clinical trials in every type of population that you anticipate to sell the drug into. So even if you're a small company or if this is a small molecule, it still has to get it has to get approval in North America, in EMEA, and in Far East. So these companies are global and they go everywhere. So finding the right target is really high on the strategic's agenda. So we get a lot of buy side. And just from our network, obviously, we do the sell side also. And to unlock the value of a CRO or a CDMO, with all due respect to my colleagues here, it's if you get a generalist to try to do it, it's going to take a lot of time understanding that market and really where the value is. So that's how we drive our business. That we know what the value of the business is because we're just living in that trench.
Okay.
So that's our marketing drive.
Okay. Let's switch gears now, and we'll turn it over to Mathew Hanson. And Mathew, can you make some observations about all the stimulus that came through and what that did and maybe how that tended to impact businesses, and then also think about this as maybe a corollary topic. Some businesses had a tough time in the early time with the COVID. A lot of people had a tough time. And then and that affected valuations and whatnot. So share with us, if you will, your observations about the stimulus and about how all of that, basketball going through the snake, affected the valuations of privately held companies.
Well, thank you. I actually wanted to start off by supplementing something Matt observation of the market in 21. So their valuations, as you would know from the stock market, were actually in the stratosphere. And we had two specific situations where we were working with buy-side representation. Envision it as an outsourced corporate development function. We're close enough to the client to understand their drivers. We're doing a deep dive on the acquisition opportunity. We're crafting the letter of intent to get us to an ultimate success. And in two specific situations, we did that process and issued the letters of intent. And the sellers came back to us with counteroffers that were actually, the difference between our offer and their counteroffer was so great that my advice to the client was don't even bother to counter. That that there was simply no benefit to that discussion, and therefore we've continued to, well, we just pulled back. As I watched those companies go through the system, those businesses did not sell. They're still, kind of plugging along, doing their same thing, but their expectations seem to have come back. In one of those situations, I had a discussion recently, and they've talked about being more amenable to selling today, and therefore their price expectations have been reduced. So I think, we are seeing valuations coming down. Some of it is the function of the profitability of the year. Some of it is the overall market and lower demand. And I think the other thing that I'm noticing is that in our business, and many of you as business owners would know this, you get inundated with contacts for people like me or Rudy or Matt, and that we're trying to buy your business, and we get a client we're working with, and well, that conversation used to go from kind of a casual introduction, and you may have one or two in the course of a year, to cacophony of activity where people were getting literally inundated, letters, emails, calls, so the people kind of said, I just can't handle it anymore. That has dropped off precipitously, and that the companies we're working with today have found that there's a lot less incoming inquiries about them selling or people trying to buy their businesses. So I think that's another reflection of how valuations will decrease because of the decreased demand.
Okay. What do you make of the stimulus? How did that affect the companies, or do you think it just worked to keep them alive?
It's fascinating. So there's two pieces to this equation. The PPP money went into the system with so much force that it actually allowed some of these zombie companies to continue to exist. And this process has now been watching a mouse go through a snake. In conversations with bankers, the expectation was in the first/second quarter of 22, money would run out, the businesses would become more plentiful, available, and they were going to start forcing those lower quality credits out into the marketplace. That didn't happen. That money has continued to go through the system, and it is now kind of at the end where most of it has been spent. And I got a call on an opportunity the other day where the company has now breached its covenants, and the banker is nudging them to consider selling the business as they might have done 2 years ago. But this is a little bit more forceful, and the information that I'm picking up from attorneys and from other credit sources are pretty consistent with that. I think we're at the end of the rope as far as the stimulus money. And then the second part of this equation is on the demand side. So this infrastructure, or the Inflation Reduction Act, put in an enormous amount of money, and I have two clients that are actually beneficiaries of that on the transportation side of the business. And the specific example is school buses. So in order to reduce the demand, they're trying to drive school buses to be EV vehicles, and they're the second largest demander of petroleum products or diesel. And because they run routes and they come back to a location, they're really ideal targets. And the demand on that side of the equation, even from the customers, the public school systems, has been remarkable. So this infrastructure bill has $1.5 billion that has been allocated to school buses, and that was to be stratified over 5 years. But the demand has been so great that the EPA has actually pulled more money of that forward. And as a result, my clients are beneficiaries of that money coming into the system.
Okay, great. Do we have any questions out there? Okay, let's, hearing none, let's,
I did have one question.
go ahead.
You mentioned drivers of value. Have you found that domestic manufacturing has been a driver? In other words, coming from offshore into that a potential buyer would view that as a value driver?
Do any of you want to speak to that?
I can talk a little bit. And I can pass it over to you.
That's fine.
I think, just from a very high level, a lot of the companies in the industry you're talking about have brought back some stuff from overseas. So two things I think are drivers of that. One was, specifically the Ukraine conflict. I had a handful of clients who, as soon as everything happened with that, everything was on hold, and then when they realized this is going to be a little bit protracted, we're not going to be able to get money, material, supplies, inventory out of there, they just threw their hands up and said, we're going to get whatever we can and sell this as quickly as possible. So that resulted in some of that business then coming back, obviously, in their domestic plants. And then again, I think as you're thinking about other things like the even beyond the financial markets, but supply chain, time for things to kind of get here, and then issues you have with pricing as you look at the inflation. When you have that lead time, that's also driven some of that as well. So again, like specific to one client that I worked with, they brought back from China because they were having such a long lead time that their customers had committed to a price up front with their customers before the product was built. Then by the time the product was built, shipped over, because of how fast inflation went up, they were losing money on every single piece of equipment that they were producing. So that was a significant driver for them. Yeah.
And I mentioned earlier how Melcap is a generalist shop, but we're largely industrial sector focused. You look at what's around us in Northeast Ohio, it's a lot of industrial businesses, production businesses, industrial distribution, building products, what have you. So that's where we spend a lot of our time. And we've seen more interest over the last, call it 6 to 12 months, around a lot of our manufacturing plans because of the whole onshoring concept. You see a lot of private equity groups today building investment theses. We do think it's a driver of more activity in the manufacturing space specifically.
Okay, other questions?
Just one last addition to that process. So I was participating in a bid for a business as a principal, and we actually got topped by a Brazilian strategic for this same company. The delta was so great that we couldn't overcome it, but it underscores Matt's characterization that the foreign demand is clearly in place, and unfortunately, there was a reality on that one that we lost.
Okay, I had a young man come to see me a couple of weeks ago, and he said that he'd been working for different businesses, and he recounted the stories, and he'd made a lot of money for other people, and many of us have. And he was thinking that he would buy a business for himself and make some money for himself, and then also, impact the workers and customers, and et cetera, et cetera. And years ago, I would have people coming out of the woodwork to me who wanted to buy a business. I would keep a list of them. Maybe I would have 30 of them at a time. And then I had a little list. I never made book on it, but I'd have a little list of businesses for sale, or I knew of people who knew of businesses for sale and whatnot. And now, by contrast, I get a lot fewer visitors like this one. I used to get 10, 20, 30 in a year, and now I might only get 1 or 2 in a year, so it's stuck out. And he couldn't make it today because he's in Florida this week. But I told him it's a great time to buy a business. I think it's always a great time to buy a business. It's always a great time to do a lot of things. But I wanted to go down the line, and we can start with Mathew, and I know that he's thought about buying businesses for his own account. Is this a good time to buy a business, taking into consideration the world as we know it and the availability of credit, et cetera, for a person or a small group to want to buy a business? There you go.
Yes.
Okay, sorry.
So my conclusion is that the purchase is the most important part. Valuation on purchases is one of the most important parts of business success. And I think this revaluation of that people are going through on asset values and business values make this a much better time than has been over the last few years. And as I look back at my career, I've been through a fair number of these, challenging economic, recessionary times. And my conclusion is that if you put your head down and you work through the dynamics, that you can establish a position and then, being customer oriented, take that business forward. It's not a fast and easy process, but it certainly can be a successful process.
Yes. Again, if I just look at what we're doing in our sector, it's a tremendous time to buy business if you've got enough powder. On the on the biologic side. Right now, FDA approved the first biologic in 2018, and the first therapeutic that came out in the U.S. And right now we have 1,200 biologic molecules going through the FDA, and we anticipate that we can only cover 3% of the manufacturing capacity. So if you can, if you can get into a CDMO, and it's going to be expensive, but it's definitely the capacity. We're sold out through 2025 right now.
Now, Rudy, what is a biologic?
So,
Okay.
so
I'm sorry. Pardon my ignorance.
So therapeutic.
And why is it so exciting now, such an
It's
opportunity?
very exciting.
Okay.
Therapeutics fall into two categories. One, we think of it as a pill. It's something that we swallow. That's chemistry bound. It's a small molecule. It's put together in a lab, and we end up, normally just swallowing it. And they treat the symptoms. They're not ready for cure. Biologics are living organisms, and they are called large molecules. So we grow them. The manufacturing process grows them, and then we have a vehicle that injects it in you, just like your COVID, RNA, that injects it in you, and that is targeted towards curing, right? So they're very different from their chemistry-based stuff, because these things are living. So if you can grow something consistent, you have to be consistent, and then the other challenge is you have to deliver that. And we do that through another piece of biologic that's called a vector. So this process there's a lot of potential in curing a lot of our human ills. Again, we 25 years ago we took a hit, and we had a couple accidents, and it kind of went into just a maintenance mode, until we figured out how to deliver the living biologic through a vector that doesn't, hurt people.
Okay, and what would you say was the impact in the short run and in the long run of the development of the COVID vaccine, of this new thing? What did that do to the business of biologics at that time, when there was the big focus on that? And then what does that know-how and whatnot do for a vaccine for cancer or whatever else going forward?
Yeah, it was amazing, because this group of scientists and companies essentially came together. Every scientist that was working in, the COVID vaccine was a biologic, and we had the delivery vehicle for it, which is adeno-associated, is actually another virus. And that was ready, so that could get injected in you without harming you, which was a big problem. And we created a backlog, because all the scientific minds went to work on the COVID problem. And the help that we got from the government was fantastic. A lot of help, lot of different kind of help. And somebody asked about manufacturing. I think I can bring. We look at CDMO as a manufacturing process. And one of the other things that
What's CDMO?
Contract Development Manufacturing
Okay.
Organization.
Okay.
These are some of the the drug or the therapy has a different status when it's going through the clinical trials. It's not commercialized. So we have to manufacture that drug for that population, and we have to work within the FDA constraints, because that's not a commercial drug that's available. So there are very specific type of manufacturers that can manufacture that that drug or the biologic, or the therapy. And one of the things that COVID did, Matthew and I were talking, that because of some of our capacity was overseas when COVID hit. Well, all the countries shut down, and it's not very easy to get biologics across the border. So right now, we had 25% of the capacity that was used in U.S. was getting manufactured outside of U.S. By 2025, we're predicting what we know, that it's going to be over 50% is going to be manufactured within these borders and never leave.
Okay, and then I take it now that we have, at least for the time being, the COVID under control, now a lot of the scientists are using the know-how in other areas, right? It's exploding now.
Yep, it's exploding. Like, again, clinical trials are the process of the drug or the biologic going through the approval process. 2017, we had 5. Today, we have over 1,200. And the math on biologic, the level of success for every dollar that you invest in there is twice as much. 6% of the drugs get approved and they come out for commercialization. It's about 10 years and the average cost is about $2.5 billion. And only 6%, only 6% make it. With biologics, we are looking at over 12%. And they are not for almost all of them. They're not for treating symptoms. They're for cure. So it's really exciting, and there's a lot of smart money, chasing it because it just makes sense.
Yeah, okay, Nathan and Matt, you might want to speak to whether this is a great time to buy a business and also the corollary, about the availability of capital with which to buy a business if you don't have it all in the bank already.
Yeah, I definitely can't speak on any of these things Rudy's talking about. I haven't heard some of those words since my 8th grade science class. So, I think from my perspective and some of the things that I'm hearing from clients is that it kind of depends, right? So if you're a strategic buyer, I think like we're talking about in this example, I think it's a great time to buy. Maybe for some of the sponsors or for someone who's looking to leverage debt significantly on some of these transactions, it might be a time where you're either going to hold or it has to be really that great opportunity. But specific to, again, some of these more strategic buyers, one of my larger clients, I was speaking with them just last week, and what they had said was, hey, we have hardly any leverage out there. We're cash flush. We're coming off of a really good year. We know that a lot of our competitors or some of these potential bolt-ons have a lot of debt, are maybe a little bit troubled, and are going to be looking to sell, and we're looking to pounce on those and hopefully be able to get a deal and also not have to pay for that increased cost of capital by leveraging it with debt, excuse me, and being able to utilize a lot of those cash reserves to grow that way.
Okay. Matt, do you want to speak to that same question? And it's hard for you because you're the 4th one, so it's hard to come up with a new idea. But speak to whether it's a good time to buy a business, and then talk about, because you, as I understand it, primarily are on the sell side at Melcap Partners.
Exactly.
Who are your buyers? Are they strategics or are they venture capitalists? And how do they seem to be feeling in terms of their appetite?
Yeah, sure thing. First off, it's a good time to be a buyer. I'm hesitant to admit that it's becoming a buyer's market because, as Ben mentioned, most of my work is on the sell side, and I would therefore have to acknowledge it's no longer a seller's market, but it is a better time to be a buyer today, certainly compared to 2021 for all the obvious reasons. In terms of capital availability, we're coming off a couple of banner years for PE fundraising. Record high levels of capital were raised by private equity groups that now needs to be deployed. A lot of cash on corporate balance sheets has to go somewhere, or you got to div it out, which means we expect a lot of buy-side activity from both private equity groups and corporates. In terms of your question to what types of buyers are we typically engaging with, it's both private equity groups and corporates. If I had to guess, I would say 50-60% of our deals typically involve a private equity counterparty, and the balance would be your strategic buyers, your trade buyers. Very rarely do we have venture capital groups involved today. Rudy, you probably come across them a fair bit more, I would think, with your line of work.
We're some, yeah,
Okay.
there is definitely some, sure.
Okay. But either way, strategic buyers or trade buyers, private equity groups, to Nate's point, my perspective and our thoughts are they're both flush with cash. It has to go somewhere. And M&A is typically a good avenue for that. And in a lot of senses, M&A is typically the fastest way to grow if you're a strategic buyer or if you're a private equity buyer.
Okay, let me see if we have any questions. Any questions? Everybody's sleepy from last night's festivities. Go ahead.
There's a lot of optimism, right? What, if any, deep down fears that you have over the next year and a half, 2 years?
I'm going to go last again.
No, we could go over the debt. We could default on our debt. And I'll ask these guys how that'll affect anything.
Just in the context of M&A, you know, there isn't, I think it was yesterday, I'm not sure who published it, but the pre-announcements, quarter over quarter, were up 10% over 2022 as of yesterday. So the pre-announcements are 10% higher right now in 2023 over 2022. So it's kind of tough to, tough to look for the problem where we play. You know, the large caps, we consider 2 billion and under, mid cap. And most of the deals are going to be there. I think it was Intralink that just put something out. 64% of the PEs, financial sponsors, they think that 2023 they're going to do 4 deals or more. Corporate side, they're a little bit lower expectation because they have to deal with the inflation and the Ukraine situation and things like that. I think they're 34%. They're saying that they will do a deal. And all the sectors across the globe, they're all optimistic except Latin America. So there's a lot of real data out there for being optimistic.
Yeah, and Matthew, tell us, about what, we've been through a lot of clouds, and so tell us about the clouds on the horizon, and then tell us if we default on our national debt, what's that going to do to anything?
Spencer,
There you go.
Spencer, that's an excellent question. So you heard from Matt that there's a lot of private equity money out in place. There's an onshoring from Rudy's perspective. There's international M&A interest in the United States. I think the thing that I find most troublesome is really back to my point about headline news. So it goes to expectations. What do both consumers and business people expect? And this drumbeat of we're in a recession, we're going to have a recession, I promise the recession's coming tomorrow, it can become a self-fulfilling prophecy. And therefore, I find that troublesome. So let's just go do business and then see what happens. We can go back and look at the rearview mirror, as we have typically done for recessions. It's the last quarter, it's not the next. And the other one that I am concerned about is automotive loans and the debt associated with that, because we've done 2 things there. We've driven the price of vehicles up dramatically over the last several years. And in order to keep people in those bigger vehicles, we've extended the loan. So it used to be, 36 months, 48 months, then 60 months was the thing. Well, now it's 72 months, right? And they're awfully large payments. And so when you start taking people's jobs away from them, servicing that loan becomes a lot more problematic. And that whole vehicle construction supply chain is pervasive, particularly in this part of the country. And while there's an enormous amount of capital coming into the automotive vehicles on electric vehicles, billions, there's a lag between that money coming in and it actually getting to the construction site. And so therefore, automotive is my concern as far as an industry goes.
Okay, let me pass the microphone. Let's give it to Matt first.
Yeah, 'cause you deferred in that.
I promised them that I've always promised all of my panelists that I'll give them high, soft ones. And then they haven't all been that way. But if any of you have questions, stick around afterwards and come up and talk to our expert panelists, and you'd be more than welcome, or follow up afterwards. But let's start with Matt, and just if you had like one or two things to say to people in this room, most of whom are involved in or interested in M&A, what would you say they should do this year to take advantage of what we've described as an opportunity?
Yeah. And actually, is it okay if I address his question real quick?
Go ahead.
Matthew here, who's really helpful and jog my memory. Expectations as it relates to seller psychology is my concern. You have a lot of sellers today anchoring off their valuation expectations that are now outdated. They're anchoring off what they believe their business could have sold for in a record year in 2021. Maybe they thought they could have sold their business for 10 times EBITDA in 2021. Many sellers probably still think they can sell their business for that today, even though valuations are maybe at 8 times, 9 times. And there's going to be friction there that I think will make it harder for guys like me to try to execute on transactions and get deals over the goal line. In terms of, back to your question.
Yeah, my question is, what do you tell these people about how to approach the opportunity that we've described and how to go after it in the new year? Then we'll get them all fired up.
Yeah, my advice, I guess, would be to a business owner is the most satisfied business owner coming out of a sell-side process. The business owner that has the best outcome is the one that enters into the process the most prepared. And we always challenge our clients and push our clients to prepare across 3 different levels. One's their business, obviously, making sure your business is ready to sell. A lot of owners for small family-owned businesses, entrepreneur-owned businesses, a lot of owners are intimately involved in the management of that business. Buyers will notice that. Is there a succession plan in place? Have the employees been appropriately trained? Owners should take steps today to de-risk management, to maybe de-risk their customer base. Do you overly rely on 1 or 2 customers for revenue? To de-risk their supply chain? Do you overly rely on 1 or 2 suppliers for procurement? Those are things that you want to think about as you ready yourself for sale. The second bucket would be, for a business owner, financial. You're going to sell your business. Will that generate enough cash for you to do the things that you want to do? Are you going to have your rainy day fund set aside for the things you can't expect? Is your financial plan in place? Is your tax plan in place? Have you talked to the right people? And then the third bucket, as it relates to preparation, what we always push our clients to do is think about personal preparation. So a lot of business owners have their identity kind of tied up in their business. Well, when you sell that business, what happens to your identity? Making sure you plan for that. And also, obviously, if you're an owner of a business and you're intimately involved in the operation of your business, you're going to that business 40, 50, 60, 100 hours a week and dedicating a significant portion of your life to that business. Well, when you sell it, what are you going to do with all that free time? You're going to volunteer, you're going to teach, spend time with family. Any of those things are great ways to spend time, but you'd be surprised how many sellers don't think about it until after the fact, after they've sold their business. So we always push our clients to be as prepared across those 3 different pillars as you possibly can. And typically that's going to generate the best outcome for the seller and leave them the happiest coming out of our process.
Okay. Nathan, do you have anything to add? Rudy? Matthew?
Nothing for me.
No, that was very good summarization. It was very good.
Okay, all right, that's it then. Unless we have any questions. Do we have any questions from the audience? No, well, thank you all for attending. Make a note that on March 17th, as you get started on your St. Patrick's Day, you can learn about everything SBA. And yeah, thanks for coming, and feel free to stick around and speak to our panelists.